Good morning. It's Tuesday. I'm Tom Elliott, and this is my market report. Now, the Dow Jones has been very strong recently. It burst through 12,000 points in the past couple of days of trading. And this is partly because everybody's feeling more optimistic about the American economy. Unemployment seems to be improving. Company profits are generally better than expected. But there's another good reason. Now, there's an old and rather odd indicator in the US share market called the Super Bowl indicator. Now, originally, before the concept of the Super Bowl was created, and we've just played Super Bowl 45, there were two separate football leagues in the States, the old AFL, or American Football League, and the NFL, or National Football League. These two combined in 1965, but they still had two conferences, the AFC and the NFC. And the Super Bowl is actually the NFC champion versus the AFC champion. Now, for some statistical reason that no one's ever been able to work out why, but it's 85% right. When an AFC, or that is someone from the old AFL, and now AFC team wins the Super Bowl, the share market generally declines in the following year. When, however, an NFC team wins, the share market goes up. Well, the good news is the Green Bay Packers, who beat the Pittsburgh Steelers yesterday, they are in fact an NFC team. As a result, on that indicator, the US share market is headed for a good year, and it's already had a pretty good start in January and early February. Now, it's not all good news depending on which company you're in. Retail stocks have been doing it very hard. Now, we've had that massive campaign through December and January by the big retailers to try and impose the GST on internet sales under $1,000. But it also seems that the bad weather that we've been experiencing, whether it's the flooding in Queensland or Victoria, or indeed the very hot weather in places like Sydney and Perth, this is keeping people out of the shops. Yesterday, Myer reported a big profit downgrade, about 15% lower than expected. The shares got absolutely smacked, down 12% on the close and down another couple of percent today. Myer was floated at $4.10, currently trading around $3.25. Its main competitor, David Jones, its shares also weaker. They haven't fallen as much as Myer, but they are down about 5% over the 2 days. Good news, however, the oil price is actually declining. Now, it's more of a political issue than a demand and supply issue, but the more pictures people see of people rioting in Egypt and to a lesser extent places like Tunisia, the more we see that on the TV, the more everybody gets worried about oil prices. Of course, in the past, instability in the Middle East has sent oil prices through the roof. Gulf Wars 1 and 2 in 91 and 2003 did that. At the moment, there is relative calm on Egyptian streets. We don't have a political solution to the impasse yet, although I think we're getting close to one. As a result, oil was down $1.50 a barrel overnight, now $87.50 a barrel, and that's US dollars. And combined with the fact that the Australian dollar has stayed pretty strong, it's currently 1.013 US dollars, so trading higher than the US dollar or welfare parity. That means petrol prices should stay relatively subdued here in Australia. Telstra shares have been very strong in the last few weeks. They hit a low of around $2.60 a month ago. They're now trading at around $2.90. Look, it's like waiting for Godot, Samuel Beckett's play. We keep waiting for Telstra and the government to do a deal on the national broadband network. On one sense, every day the deal isn't done, it's sort of negative for Telstra. On the other hand, assuming a deal is done, then every day that passes we must be getting closer to it. The rumours are that the deal is imminent, i.e. within the next week or so, so that would be good for Telstra. It would mean a massive payment of, admittedly, taxpayers' money from the NBN to Telstra to essentially buy the old copper wire network, shut it down, and then replace it with the much vaunted fibre optic network. Telstra shares doing quite strongly. So overall, if the Super Bowl is any indicator, we are headed for a good year. In my view, you shouldn't pay too much attention on things like that. Look at company profits, look at unemployment, look at interest rates. They will tell the story of what the stock market does over the ensuing months.